Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, September 27th. This will be a technical analysis breakdown. So if you are someone that uses charts within your trading, or maybe just interested in learning more about charts and how it can be used to help make good decisions as a trader, this will be a video for you. First off, a couple clarification points. Number one, the price you see over here will still be moving around, and the candlestick you see there will be moving around. That is because the market's still open for a small amount of time. I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, ticker symbol LVTX. Very, very nice pattern here because it's pretty clean, and when things are nice and clean, it doesn't mean that there's guarantees, but it does mean that there could very well be a self-fulfilling prophecy because so many people are watching the same thing and wondering the same thing. So the first part of this pattern that really stands out is how you have a very well-defined, nice upwards trend line right there, illustrating the fact that, yeah, the price pulled back from those opening 30 minutes, but after that, the price has just slowly been, not only maintaining itself, but slightly moving in the upwards direction. But the part that really stands out to me, and I think the level that a lot of other people will be watching, is this breakout area right here at about $5.30. So again, no such thing as a guarantee, but is it valid? Is it plausible to think that the price comes up here and can get a break up through that consolidation period, that break in and of itself could very well create additional buying pressure? To me, that seems like a more than plausible situation there. So if you like to play nice clean patterns, like to play stocks down below $10, here you go. Next one, AVCT, and pulled back today. Again, this is where things get a little tricky because it's a matter of perspective. What do I mean by that? Let me just get rid of that line there. So if you're some sort of day trader, flipper, scalper, whatever you want to call yourself, and you're buying right there, maybe you bought right up around there this morning and your plan was to buy and sell within 20 minutes, well then from that perspective, the chart looks pretty bad. Now, if you do care about the big picture point of view, I understand that from these areas, the price has pulled back some more, but the dynamic to keep in mind is, okay, well, where are these lows at? And you can see right now you have a low right here. You have another low right there. You have lows right there. You have lows down there. And if you envision each one of those as stair steps, what do you have? Emphasis on big picture. Well, from the big picture perspective, you still do have stair steps progressing in the upwards direction. So is this a bad or good looking chart to you? I have no idea. That's all about what was your game plan? What was your strategy going in? Again, from a very almost day trader type standpoint, yeah, very, very rough day. But if you do care about things from a bigger picture point of view, even with the bigger pullback today, the price does still have the opportunity to continue to chip away and build those higher bases. Next one, MLCO, and I should have probably reversed this one because it goes along the same topic of a nice clean pattern, so you have the potential self-fulfilling prophecies. So just keep all that in mind because I'm not going to repeat myself when I just said all that. You understand what I'm getting at. So let's draw up this clean pattern here. So we have the level of resistance. We have the area of support down here, which is valued at, let's see, $6.55, and I will change that to green to represent the support. And I'll just change the pattern to one color to make it easier to see. So we have our resistance, we have our support, we have the big momentum move right there. So let's put the golf ball down there to make it a little bit more visual, and this would be known as a bull pennant pattern. So like I said, are there guarantees? No. But is it plausible to think that if the price comes up here and pushes up through there, that break in and of itself could create additional buying pressure? That it's absolutely not a guaranteed outcome, but a plausible outcome. Next one, AMC, and I mean, this is a very ugly looking chart. It almost doesn't seem like a real chart because it was just, I mean, truly a brutal day. Drew this trend line. I can't even say the words. It's such a kind of an ugly looking chart, but drew this trend line on Friday. Price broke below it, and it's served its purpose. But ever since this attempted bounce right here, first 30 minutes, second 30 minutes, and then that red candle showed up, and again, no exaggeration, from there, only had one green candle the rest of the day. So opening hour, 2 green candles, and then from there, the rest of the candles all red, meaning selling showed up. So truly just a brutal day, but it does present an interesting potential trading opportunity because AMC, very clearly a popular stock. There's a cult following behind it. So these are situations where really just any sort of good news, in fact, it doesn't even need to be good news. It can be bad news that's not as bad as expected, can create these things to really get momentum. And when you have just look how steep that trend line is. That is one of the craziest trend lines I've drawn in a while, but that just shows how essentially the price drops straight down. So my point here is this, given the context of it being so popular, guaranteed? No, but is it rational? Is it valid to think that the price can get through that trend line, that could create a nice tradable bounce? Now, it could just be a dead cat bounce, but who knows? Maybe it's the beginning of a bigger reversal. But even from a trading standpoint, if it's only a dead cat bounce, there can still be enough wiggle room in there to pull out profit. So pointer being is twofold. Very, very popular stock that's got a crazy, crazy downtrend to it. So if that downtrend can be broken, does that lead to a tradable bounce? Let's see how the next couple of days play out. Next one, NIO, and what I'm going to do here is go ahead and adjust this level down, because to me, this is going to be the main level that I think everybody will be watching at 1745, and for good reason. You're going to have some people saying, you know what, if the price comes down to 1745, I can see it bouncing, and I understand that. You can see right there, came down there, bounced. Right here, down there, and bounced. So those people are not being irrational. But this is why risk management matters, because I can see another group of people saying, okay, but what happens if it doesn't bounce? Well, if it doesn't bounce, I think that could cause a lot of people to freak out, because all of a sudden, well, it's not bouncing. History is no longer repeating itself. Uh-oh, something has changed, something's wrong, and that could very well create that much more downside selling pressure. So both parties are logical, both parties are rational, but like I said, this is why risk management is so important, because somebody's going to be right, somebody's going to be wrong, and you just don't quite know who it's going to be. But the idea here and the underlying dynamic is neither party is just acting as a degenerate gambler, doing random things. No, there's a thought process between each of these areas, and that's what matters. Is you got to have a thought process, you got to be making rational decisions, and 1745 is one of those rational areas. So keep a very close eye on that. If there are any sort of bounces, main area to watch is going to be that purple line there, the 50 period moving average, currently valued at $18.15. Real quick, I want to pause and personally invite you to get signed up for this free live online training that I'm offering later on in the week. So if you've been enjoying what you've seen, you want to learn more about this tool, how it should be used, and why it's just so powerful in helping traders build consistency, then certainly get signed up for the free training. If you're watching at my site, there's an area right there on the webpage. If you're watching on YouTube, then down in the description box, there will be a link that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then definitely get signed up for the free training. Next one, FFIE. Very, very brutal one today when you factor in just kind of the history of things. Opening 30 minutes, very, very strong period. Acted like it wanted to be strong, and then from there kind of just drifted downwards, which now completely changes around the context. Because, yeah, this is an ugly-looking chart, but it's not totally destroyed. And as I say, you know, there can be opportunity in the ugly. And this is only, I mean, trading as a whole, you should only be doing it if you're going to be be disciplined. But these are definitely situations where you need to be disciplined because, you don't want to turn into a bag holder. But in my mind, 80 cents, very, very interesting level for a couple reasons. First off, it's essentially that gap close, previous breakout area. Second, you have that purple line there, the 50 period moving average, I guess technically at 81 cents, but you get the idea. General ballpark. Right around here, you have a couple of significant areas, which does not guarantee anything, but is it valid? Is it plausible to think that the price could come down here, find some support, and then bounce back upwards? Yeah, that is plausible. And it's not like the thing even needs to reverse back up to highs to make it worthwhile. I mean, even if it just goes a quarter of the way or half the way, you'd still be looking at a very good risk-reward scenario, meaning how much are you, standing to make versus what do you lose? Because to be fair, maybe this is just, the start of a move where it goes all the way downwards, but that's why you have a stop loss. So that's why you got to be, disciplined, stop out where you're supposed to, because if you do get the bounce, then relative to what was being risked, you could be looking at a very nice upside reward. So from a risk-reward planning standpoint, you have some good opportunity here. Next one, SOFI, and a very brutal day, especially when you consider how the thing started to work its way up very nicely and then just completely got wiped away. And now approaching some interesting dynamics here. So in fact, let me do this because I want to draw out this trend line here a bit, because it's looking like there's a likelihood that this trend line here could be getting tested. So right there, you have an interesting trend line that is essentially the bottom part of, let me get the other part of this pattern in, what I would consider a falling wedge. Now, I realize, no, Clay, that's not a falling wedge. Yeah, we'll call it a poor man's falling wedge, because I'll be the first to admit it's not the cleanest, but the dynamic here is there is, potentially where is this thing finally running out of steam? Is the downwards pressure finally running out? That's a question that I think makes a lot of sense to ask, with this current, downwards move over the past few days, and we'll see what happens with it. But as I just talked about with the previous one, this is where risk management is very important, because if the price comes down here and just blasts down through that line, you don't want to be stuck there holding and hoping. But if the price does come down there and get some sort of bounce up to that level, even if it gets rejected from that red line and goes back down, I mean, that movement right there relative to what was being risked could still really make a whole lot of sense in your personal risk versus reward planning. So, that's where it all comes down to, personal preference. But the point here being is, with the way things got so ugly today, and now with the price seemingly approaching that bottom part of that trend line right there, could there be some sort of bounce? We'll have to see what happens. Next one, TSLA Tesla, and not a whole lot to report other than one little update that, yeah, this morning was pretty rough. Came up, acted strong, acted like it wanted to break up through that top part of that sideways channel here, and then just rolled right back over. And then after rolling back over, you can see that top of the channel went right back to acting as resistance. If you look closely right there, you can see the price was rejected at that area, and then a couple more times there and there. So right around here, the top part of that channel, which I talked about on Friday, up around 281, has gone back to being an area of resistance. And it's apparently going to be one of those tricky ones, because, yeah, it was very tricky there to see the price act like it was going to break out, get momentum, and then, hey, just kidding, back inside it went, and then back to acting as resistance as it had before. So keep an eye on 281. That has certainly been confirmed as an area of resistance. If this downwards move here continues, then you have the bottom part down here at right around 271, which was not perfect, but congratulations to anybody that watched the video from Friday and accumulated some shares down around that, or contracts or down around that area of support, because you certainly got a very, very nice bounce in the upwards direction. So as of right now, maybe Tesla is just going to start to enter into some sort of sideways channel for a while. You know, that's kind of the pressing question on my mind at the moment as somebody that watches Tesla on a daily basis. Next one, ADTX. And overall, I like it because, once again, I think there's a certain area here that a lot of people will be watching. So you have that, you know, self-fulfilling prophecy type dynamic to it. But in my mind, I think a lot of people have noticed that these, you know, highs kept getting lower and lower, and they've drawn that trend line right there. And they've also probably noticed that, yeah, at the same time that's going on, the price has drifted downwards, in fact, creating this downwards channel here. So let me change that to green to represent that. So yeah, there is a downwards channel. However, there's a but. And the but here is this, is, well, what was happening before this downwards channel came into play? Well, there's this nice move up here right there, which actually creates a bull flag pattern. Now, you want to be a little wary because it is a bull flag that's occurring within an overall downtrend. So that doesn't mean that the bull flag is not valid. It just doesn't mean that it's as attractive as a bull flag, whereas if a bull flag was occurring in an uptrending situation. So point here being that, in my mind, it's a nice pattern. It's worth keeping an eye on, especially when you have the volume dynamic matching up like it should. And as any volume analysis will tell you, that when you see prices pulling back, you want to see volume drop off. And, you know, that's exactly what happened here. Much less volume compared to when it was breaking out. So if you like to play bull flags, if you like to play stocks down below $5, here you go. Next one, SQQQ, which is an ETF I've been doing pretty routinely right now, but it's a ETF that will go up if the NASDAQ markets go down. So it's just a way for you to make money with prices going down. So again, if you think NASDAQ stocks or the NASDAQ, the QQQ will go down, this one will go up. And it's been very strong and put this level into play on Friday, but that's kind of no longer relevant because there was a bit of a pullback here, but in doing so, it's kind of just tilted this trend line now the other direction, which is right here. And again, I assure you a lot of people have drawn that trend line, so you have that self-fulfilling prophecy dynamic to it. But right up around, I think $58 is going to be a level that a lot of people are watching. And I'm not trying to pat myself on the back, but I am patting charts on the back. And this will mean more to those of you that watched the video previously. But if you did, you remember me putting that. And if you don't believe me, that's fine. I get it. I'm a stranger to you on the internet. But just go back and watch Friday's video. And you'll see that I put that green line in play right there, called it a level of support. I mean, you can't make this stuff up. Price came down, and look right where it found some support before bouncing back upwards. The power of technical analysis. So I'll use that as a quick plug. Get signed up for the free class that I'm offering here later on in the week. I mean, you have a real life example of this all playing out right before your very eyes. And like I said, if you don't think I put that green line there beforehand, I understand. Just go back and watch Friday's video, and you'll see that it was put into play. So yes, you have two very well-defined levels. You have 54 as that key level of support. You have that trend line right there around as that main area of resistance and potential breakout point. So yeah, setting up for, I think, some fireworks here over the next couple of days. So that wraps up the top 10. Again, if you like what you saw here, and like I was just talking about, you want to learn more about this tool and why it's just so powerful in building consistency, then definitely get signed. Like I said, it'll be later on in the week, Thursday, September 29th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make these and put in the time and effort required for this content, then do two things for me. Hit the like button, leave a simple comment. Say hi. Tell me what you traded today. Tell me what you're watching tomorrow. Tell me the weather outside. But those two things go a long way in helping out with the YouTube algorithm, helping out with the channel, and just, like I said, communicating to me that you enjoy. So get signed up for that free training. Hit the like button. Leave a basic comment below. Everybody, thanks for watching. Take care. Have a good one.